Is that a worrisome sign? Is it a sign of strength, as I ask, or weakness?
You know, if you study that, like, is the concentration or breadth an issue, the results are actually a little bit inconsistent. Sometimes it can be a positive harbinger and others follow, and other times it isn't. It's more of a short-term risk off or kind of relative risk. I think the market and these names are up too much, personally. I think one of the sort of inconsistencies that I see in the last few weeks is an economic recession or a demand recession seems to be in some parts of the stock market, like commodities, energy, metals prices, but not, say, in semiconductors, like you mentioned NVIDIA, which is only up 84% this year. I think it's 130% since the lows last fall, right? So it's hard for me to see how. Look at Micron's report last night. I mean, the stock's up a lot today. I think what they told you is your view a year ago, not your view, but one's view that, hey, maybe they don't lose money at the trough, turned out to be ridiculous.
Well, you got to be in the right space when it comes to chips. I mean, you believe me, I'm not preaching to you. You should be preaching to everybody else. You used to cover the space, right? You know this space better than most. Yeah,
well, published on Sunday is that within tech, I don't like semis right now, because if I look at just like the 5 or 6 month performance of the semi index, yes, it's NVIDIA's a big contributor of it, versus the broader market, it's now outperformed by over 25%. That's at the highs in the last 13 years. So the relative outperformance of the market is massive. We know there's inventory problems. You saw that from Micron's results. So to walk in today and say, I love semis, I'm going to get long for a trade, I think that's way too late. And so I think there's other parts that I would rather gamble on. And the other thing that I think is really underappreciated, I've been talking about this with clients a lot, is when you looked at Silicon Valley Bank, they told you something interesting. They told you that across their whole deposit base, there was a 14% annualized decline in the month of February. Part of that means that some of the tech venture businesses were starting to slow down fundamentally. I find it hard to believe all tech companies are immune from that. So I'm not saying, it's like, a disaster. I think you get people hiding in the bigger names, they feel safer about them.
Oh, is that what it is? It's a defensive.
I think it's a little bit relatively defensive,
is back.
More justifiable, but I don't think it's massive offensive tech when, at least in my mind, it's kind of obvious that the probability the economy is slowing is higher than the probability it's accelerating.
Well, why do you think that the run has been as strong as it has? Is it based on the idea of a Fed pause?
Yeah, I think it's as simple as that. I think the knee-jerk reaction is going to be the price-to-earnings ratio expands when the Fed gets dovish. So I'm going to get.
Fed's close to a pause, isn't it?
I don't think that's wrong. I think what's interesting
closer to a pause.
I wrote about this, I think, 2 Sundays ago. The most tortured set of investor conversations I've had all over the map, from people saying, they're going to cut 100 bips to get the banking system to survive, to they're going to keep hiking, and then the most obvious market response, which is you just buy growth and it goes up. And it was like the market was clear and investors' rhetoric was tortured. If I take a step back, like as you mentioned, a lot of these names are up quite a bit since this event. I think the one thing that makes me worried about getting too negative is just how resilient the stock market has been in the face of what's clearly deteriorating, outlook.
So you raise a really good point. That word resilient.
Yeah.
Has it been? Now, on the surface, it looks like it has.
Right.
But we just let in saying that the whole thing's top heavy. 7 stocks have done everything. Under the surface, it's not nearly as strong as it would appear. Is it really as resilient as it looks?
I think year to date, those numbers are right. I think if you look at the last couple of weeks, there's been broader participation. You've seen a bunch of other tech stocks go up. So I think the interpretation has just been, hey, they're dovish. If I really mark to market, how do I feel about the world today versus a few months ago? I have 24 earnings numbers. They embed a V-shaped recovery that's implausible. The numbers are too high. I don't think the Fed's going to be anywhere near as dovish as what this recent multiple expansion implies. I think the valuation isn't particularly compelling versus, say, bonds or other asset classes, or even on 23 or 24 numbers. I think speculation's kind of up a lot. If you look at profitless software, if you look at Bitcoin, if you look at Tesla or NVIDIA, whatever your proxy are.
I read you those numbers.
So the only thing you really have is just, positioning was kind of light. Rhetoric is kind of negative.
There was maybe the most offsides positioning in the last however many decades coming into the year.
Yeah, low nets, and people like non-U.S. equities more than U.S., so now all of a sudden people said they're dovish. I think what the rubber will meet the road will be, will the earnings really grow? Because if this PE, price to earnings expansion, is a leading indicator for earnings growth, then this is great. But I don't think so. I don't think the Fed's truly going to get dovish until the earnings look like they're going to be more impaired.
Let me ask you this.